Hello, this is Bob Joyner, and in this video I'm going to talk about day trading strategies, in particular exiting the trade. And this can be a pretty fast-paced video here. There are 5 basic stock price movements. Yeah, I'm oversimplifying things quite a bit, but if you can label price movements in stocks, the good thing is it can help us recognize them when they occur, and we can increase our profits and limit our losses by recognizing them. The first type of trade I call the perfect trade. An example of that is AKS. All of these charts are taken from September the 6th. I'm using various time frames. As you can see, this is a 1-minute chart. An example here would be with if you got into AKS and let's say you made a 1% profit and you took your profit reasonably because it's hitting the R2 line up here. But sometimes if you can extend your view out a little bit and look at a little bit larger time frame, you might be able to capture more profit. This is a 5-minute view, and you can see how the price of the stock just kept on going. A second type I call the ping, and RIO would be an example. Let's just say that you had gotten into this trade up in here expecting it to continue higher, but what happens is it backs off some, really never really does a reversal or anything, but it keeps hitting resistance near this high of the day, and it's just pinging back and forth between a narrow price range. Well, recognize that and don't spin your wheels waiting on a stock to make a move. If it's not moving, your best course of action is to get out at break even or take a small profit if you can, but don't spend all day spinning your wheels on a stock that's not happening. A third type of price movement I call the rocket. The rocket can be up, it can be down. There's an example of Sears on the same day again, and you can see, let's say if you'd gotten into this trade up in here, well, suddenly it does a big reversal, right? So a great reason to have stops in place. Movable stops are a thing that I talk about quite often, but you have many signals telling you, such as PVT over here on the right side, this right panel right around 11 o'clock, right after 11 o'clock, just tearing down through its moving averages over here. And so good thing, but when you see that rocket happening, the best thing to do is to act quickly. Don't act like a deer caught in headlights, but take immediate action. Do something before you lose your shirt. A fourth type is called the steady climber. This is an example of a trade we did today in the morning hours trading chat room. Our entry was around 1384, and you can see price ended up around 1545. I think is where I was talking to everybody about a possible line of resistance. But that's a big move, 1384 up to here. Big percentage, over 10% gain on that trade if you'd been able to stay in. So one of the things is to recognize when price is moving like that, and to have things in place. Like over here we had PVT just holding steady as a way to use movable stops to move up your stop higher and higher as price continues up, so that you capture more and more profit through that steady climb. A fifth type is what I call the sudden reversal, and the sudden reversal is, let's say you get into a trade. You know how it goes. You get into a trade because you think it's going to keep going up, right? And then what happens is it makes this big gap down or something. The spreads in this case were probably the part of the cause of that price movement right in here, but it just makes a sudden move, and you've got to decide. A lot of people, new traders, are going to do some kind of an averaging down thing. Well, it went against me, so I'm not going to take my loss. I'm going to buy more. But we all know the fallacy of that, because after it went down to here, it just kept going down the rest of the day, and then you exit at the end of the day with a much bigger loss than if you had just made some clear decisions back when price moved against you. So anyway, this is very quick. Run through 5 different types of trade exits. In summary, just want to say, but by recognizing different types of stock price movements, you can stay flexible with your trade exit decisions, and you can capture more profit by recognizing that each trade is unique. Feel free to play this video again if you need to. More information, of course, is online available at our website, startdaytrading.com.